Good morning, everyone. Welcome to Ainsley News. And today we are going to be talking about a critical time for crypto coming up. Crypto prices have traded within a volatile consolidation range this week, opening at a weekly low of 37,333 US, rallying to a high of 45,039, and then giving back the majority of the gains, closing at 39,220. As the global macro geopolitical stage continues to create uncertainty in markets, Bitcoin bulls attempt to set a price floor. The bulls have been absorbing a modest but persistent sell-side pressure for over 2 months now, largely sourced by short-term holder divestment. With prices trading sideways in recent weeks, a relative equilibrium has been established. However, given the limited incoming fresh demand, this delicate balance can be disrupted by any significant degree of seller exhaustion, or conversely, a reinvigoration of sellers. Thus, the question to be answered is whether the capital support being provided by the bulls will be sufficient to keep the bears at bay. We can assess the current on-chain volume space with a specific focus on flows into exchanges to best find the magnitude of sell-side pressure and investor divestment. Monitoring of exchange activity is a powerful strategy within on-chain analytics, although it does require an appreciation of data mutability. The tracking of aggregate exchange flows, especially over longer periods, months, provides useful insight into the balance of supply and demand. To start, there are high-level nuances for interpreting exchange balance metrics. And those are Bitcoin hodlers of all wallet sizes tend to be fairly religious regarding self-custody and are thus the most likely cohort to withdraw their coins. Newer retail value market entrants are far less likely to withdraw coins, preferring the simplicity of custody solutions and trading options provided by exchanges. Institutional treasuries are similarly likely to take advantage of exchange custody solutions or similar, preferring the expertise and risk management offered by such firms. These coins are also more likely to be traded via OTC desks and held in specialized multi-signature arrangements. And finally, with the proliferation of derivatives markets, Bitcoin units can also be used as collateral, and thus exchange inflows may also be a result of providing additional coin margins. Note that 3 or 4 of the above characteristics have a skew towards exchange inflows. This is in part what makes the aggregate outflows of 575,876 BTC from exchanges, which is about 3.655% of the supply, since March 2020 sell-off so impressive. Note also how a relative equilibrium has been established since September 2021. During the highly volatile macro and geopolitical events of the last few weeks, exchange net flow volumes are also reasonably stable. Despite a slight bias towards inflows this week, around 1,000 BTC per day in net inflows deposited to exchanges this week. This magnitude presumes sell-side supply remains fairly modest, particularly given the global macro context. The proportion of on-chain volume that is in profit is also near historically low levels, reaching 47.5% this week. Flipping this observation around, we can observe that over half, 52.5% of all transaction volume, is currently spent at a loss. For context, the final stages of previous bear cycles were interrupted by over 55% of all transfer volume being in loss. The current drawdown is historically significant across several on-chain metrics and measures. Despite being shallower, -50%, than past bear markets, -85%, this describes characteristics that are similar to previous large-stage bear market trends. However, whilst the degree of on-chain panic selling is significant on a statistical basis, it is notably lower relative to market size. This is a result of a maturing market. Investors who are divesting are preferring to sell coins that are held at a loss, an activity that has been dominated by short-term holders. Meanwhile, The long-term holders' sell side has continued to decline since January 2021, a signal of growing conviction in the face of high macro uncertainty. We're certainly operating on a delicate equilibrium in the crypto market, making it an increasingly critical time for this market. That's news today. I hope you enjoyed it, guys. For any crypto products, please visit ainsleywealth.com.au. And for any metals like gold and silver, please visit ainsleyBullion.com.au. And I'll catch you again tomorrow. Bye.